Hey, good afternoon, everybody. I welcome you to today's event. This is our sneak preview, Q1 earnings. You got John Hopkins. It's Tuesday, April 23rd. And I want to welcome anybody who might be new to EarningsBeats. Really appreciate you taking the time to give us a try. Of course, want to welcome all of our existing subscribers. Many of you have been with us for a long time, so very much appreciate that as well. This event, like all of our webinars, will be recorded. So if for some reason you're unable to stick around, you don't have to worry about it. We'll make sure that you are going to get a recording. Of course, this is our sneak preview of earnings season, which really is just about to kick into high gear. And tonight, Tom's going to talk about some of those companies that have already reported, maybe a little sneak preview of looking at some of these companies that have earnings coming up over the next week or two and how it might impact them. I did notice, Tom, a couple of key companies reporting after the bell tonight. One was Texas Instruments, which is up very nicely. Another one is Tesla, which is also up very nicely. So maybe off to a decent start here.
Yeah, actually, earnings so far, and I saw Texas Instruments and Tesla. I don't know, I didn't see their earnings, but I just saw the reactions. But yeah, reactions or the actual earnings themselves have been really strong. One of the things I put in the daily market report today was last week there were 87 companies with market caps over $1 billion that reported their earnings, and of those 87, 65 beat earnings estimates and 5 matched. So that's 70 out of the 87 companies that either beat or matched, leaving only 17 that missed estimates. So anyone thinking that the economy is slowing and that, this was going to be a rough earnings season, well, that's not the case at all. Once again, we see the overwhelming majority of companies coming through and beating. I had written down somewhere yesterday's beats, but yesterday was another strong day of beats. And yeah, I mean, looked like a couple of the companies that I looked at this evening reporting some pretty good, well, I don't know if they reported good numbers, but they're getting really nice reactions. So I don't know, maybe we were set up going into the earnings session. I think tomorrow and the rest of this week going to mean a lot, I think, technically, because as I pointed out in the daily market report this afternoon, our major indices, we broke down below 20-day moving averages. The 20 days have moved below the 50-day. And now with this strength that we've seen the last couple of days, we've kind of gotten back up to challenge or almost challenge 20-day EMAs from underneath. And if we can go back through, to me, that's starting to suggest more of a sign of consolidation after all the buying that we had off the October low, rather than an extended downtrend. Now, if we fail to get through and we start to roll back over, then we may have a different story and we'll have to keep evaluating it. But yeah, I mean, at least this week, we've started off somewhat encouraging. We'll see if we get some follow through into the end of the week.
And what's interesting is Tesla, which was up about 1.8% for the day, is up now about almost 8% for the today's session. So it's a pretty decent bump. I know they missed earnings. I know they missed revenues. I know that they had some weaker guidance for building. It could be one of those cases where it's gotten beaten down so much that, anything they say in the conference call that Elon might say that's positive, maybe potentially the stock's putting in a bottom.
Well, I think it probably is in the process of putting in a bottom. I don't know if the bottom is in on Tesla. And if they did miss top and bottom line, I think, we always talk about buy on rumor and sell on news. A lot of times companies come in with good numbers but they've gone up so much in the past few months that you get a sell off, even if the news is good. It could simply be the flip for Tesla. I mean, it's been a kind of a sell on rumor, and now it looks like it's a buy on the news. I wouldn't begin to feel good about Tesla or even just a little bit better about Tesla until it can clear about 160. That's where we had a triple bottom since maybe the second week of March. There were 3 bottoms at 160, and we went below that. Now the 20-day EMA is about 160. So getting back up to 160, I think, is doable here on this push. but I'm going to kind of reserve judgment until I see a little bit more strength out of Tesla.
Yeah. And Texas Instruments not gonna hurt the semi sector. That stocks up about $9 after hours. I didn't see the numbers, but it's probably not gonna hurt the overall market tomorrow either.
Yeah, Texas Instruments really getting a good report. Recent highs, 2024 highs, have been up and about that 175 area. In fact, I think we only had one open that was above 175. It probably came in around 176 or 176 and change. And I'm showing right now Texas Instruments after hours up up to 175.99.
Yep.
Just 10.5 bucks, six, a little bit more than 6 1/3%. So that's going to give the semiconductors a lift, assuming that those gains hold into tomorrow's open. So, yeah, I mean, again, I think I still feel like the market's going to go higher. I mean, you can call me perma bull, I guess, if you want, but I think I've shown that if I'm bearish, I'll let you know I'm bearish. But my signals tell us that we're going to go, or tell me that we're going to go higher. And that doesn't mean we can't have a 10% correction. But I don't know. I don't think we're going to go down that far. I think that, I don't know if the selling is totally done, but I have a feeling that if we do go down one more time, I think that probably be the end of this, maybe an ABC type of correction to the downside. And then I would be looking for higher prices over the rest of spring and summer.
All right, let me step aside and you get the program going here.
All right, sounds good. I'm going to kind of do things a little differently. So I guess if you want to give us some feedback later, you can write into support@earningsbeats.com, or you can just in the Q&A type in, what you think of tonight's session. But what I'm going to do, we have our actual earnings, Q1 earnings coming up next Monday. And so what I'm only going to look at the next few days in terms of upcoming earnings reports, but I'm going to go through, rather than just pick out the ones that I think are strong, I think what I'll do is go through maybe the top 10 of each day in terms of market cap, the top 10 stocks that are going to be reporting over the next few days, and just kind of go over those and tell you what I'm looking at, whether or not I think the market, or whether I think those stocks are more likely than not to report solid results, or maybe, might want to be careful. So I think I'll take that approach. But before I get into any of that, I just want to make sure that the members that are here and anybody listening on the recording later, that you're aware of what we do with upcoming earnings chart lists, and the fact that we do a lot of work. Well, Matt Townsend in particular does a lot of work putting these together for our members so that you've got it all organized. All these earnings reports are organized in one chart list for each day. It makes, if you like to trade earnings, this is probably one of the best features that we offer at EarningsBeats. It's really cool. So I'm going to show you, I'm going to start from in this particular account, stock charts account, I haven't downloaded the earnings for this week. So I just want to show you how easy and how quick it is to download from our website. So that's what I'm going to start with. And then we'll take a look at some charts. I'll give you charts of companies that have already reported here over the last couple of weeks that I think have come through with some great numbers, great reactions, companies that I would certainly keep on a watch list for any pullback to possibly get into. And then I'll take a look at those maybe 30 or so companies that'll be reporting the rest of the week, the big companies, and we'll just kind of dissect each one of them one at a time. So let me bring up your, first I'll head into our member portal, which should be up on your screen now, and just kind of show you where you can find this information and how you it's so simple. You do need to have a Stock Charts Extra or Pro membership in order to download them into a Stock Charts account. Obviously, if you're not a member, you're not gonna be able to download them into their platform because you're not a member to their platform. But if you're non-member, or if you're an extra or a basic member, you can still look at the chart list. You just can't download them. So I'm going to start first from the member portal. You can just go down under stocks and you'll see chart lists. Click on that. And then if you go all the way to the bottom, you will see these upcoming earnings chart lists here that you can download for free. We do it all. We do all the work and lay it all out for you. And all you have to do, let me show you what you have to do. Even though we've gone through Monday morning's reports, and we've gone through Monday evening plus Tuesday morning's reports. I'm going to download all of them just to show you how easy this is. It's 5 chart lists, but you copy the password, click on the link, paste the password, unlock the list. Then you save the chart list. So I'm going to replace a chart list that I already have included in here. I've already changed the dates. And so I'm going to put it right in here. I'm going to save results. Boom. That day's already done. That's how quick and easy it is. Next up, let's go back. And I'm going to do it for Monday afternoon and Tuesday morning. So the way these are laid out is any company that reports on Monday morning goes in one chart list, because at Monday at 9:30, when the bell rings to open, these are all the companies that are going to have new information. New earnings reports are out. And so I want to be able to look at all the companies that have reported since the last market close, which would have been Friday, and those earnings would be on Monday morning. Now, the next one, these would be Monday evening after the market closes and Tuesday morning before the market opens. We want to combine those because all of those charts will be opening on Tuesday morning with new information. So here we go. We're going to save again, copy that password, earn7744. I'm going to pull up this link. I'm going to paste it. I'm going to unlock the list. And now I'm going to save the list to the upcoming earnings chart list that I already had in here for 422 and 423. And I'm going to save the results. Uh-oh, got an error on that one. I've already downloaded them once, so I'm surprised that there was an error. But that was yesterday, so hopefully the rest of these work. Let me try again. Let's go with earn 1662. We're going to copy. All right, now something's just going on with stock charts, figures. Well, I have one that I can kind of show you. Well, it's not going to really work out that well. Anyway, this should work out. I don't know what's going on, why that. Maybe I need to maybe just I'll try one other one. Figures, when you go to show something. Yeah, this is something that's probably in my cookies or something, but anyhow, all right, so we'll stop doing that for right now, and move on to the earnings. I mean, that I've never had that, or rarely have this hiccup, but it's probably something on my end. I think if you go in and you copy these passwords, click on the link, it should come up and you should be able to download into your chart list. But anyway, I mean, some of these earnings reports, if we look at Thursday evening into Friday morning, I mean, there's probably 100 and some companies that'll be reporting between Thursday evening and Friday morning. And you can literally at Friday morning at 9:30 or 9:31, you can bring up that chart list in summary form and you can see all 100+ companies and how they've opened. I mean, that's pretty cool to be able to look at all these companies at once and see which ones are the best openers, you know, from earnings, which ones are not doing well. You can sort it by scooter score. You can put your sectors and industry groups in there, and you can check to see if maybe semiconductors are reporting, if that's something you're really interested in. Anyway, it's a great way to kind of organize things. And like I said, Matt spends a lot of time putting this stuff together, and I just want to make sure all of our members are aware of it being out there. But anyway, maybe during the next show or something, well, I don't know if I'll be able to do it tomorrow morning because I kind of got a full plate for that show, but maybe next week when I get back from vacation, I'll be able to show that feature in some depth, because I do think it's pretty cool and pretty important. Anyhow, what I'm going to do is go ahead and go into the earnings that I think are pretty solid. I want to make sure I got the right list here. These are companies that have already reported that I believe look really good on their charts. So this was Delta, and they're going to be in chronological order. So Delta was the one that reported. I think they reported back sometime beginning of April. This might have been this candle right here on April 10th. Yeah, that's the volume spike. I think that's the candle right there with earnings. But we went all the way up to about 49 and change that day, and then we came back down. But we've been holding the 20-day, and now we're all the way back up, and we're at a new closing high over here. But we still have this high from back in July of last year that we need to try to negotiate. But 20-day moving average has been pretty good support on this stock now for a while. So Delta looks good to me, and 20-day test certainly would be a level to consider. The next one, I think there are like 22 or 23 companies that have reported so far that I wanted to show you. Constellation Brands, you can see number one, AD line was pretty strong up until earnings were reported. And we kind of pulled back a little bit, but usually this pullback down to the 20 or the 50-day moving average provides us an opportunity. I think that long tail below the 50-day and that kick save, I think this is probably a stock that's setting up to go back to the recent highs. But if you look at Constellation Brands relative to its peers in the distillers and vintners group, I mean, it's 52-week high. So, excuse me, in my mind, you've got a stock that's been leading in its industry group. It's in a nice uptrend. AD line was really strong up until after earnings. And I think since then, we're probably just getting this pullback like we are in the overall market. But notice we gapped up. And I always talk about this too. If you open below the prior highs, normally you'll get a reversal and go back down. If you open above the prior highs, you might come down temporarily, but normally it's a very, very brief move to the downside, and you usually move right back to the upside. So I think market makers give us a little clue with earnings, depending, we get gap ups. Do we clear the key high or not? And that's something that I like to follow and I like to watch, and keys me in a little bit to what I expect in terms of where I think the market or where that stock may go after its earnings report. Anyway, Constellation Brands, I think, is interesting. It is more of a defensive stock. So if you're a little worried about the market right now and you think defensive stocks are better plays, this is one of those stocks I think that could maybe do pretty well and maybe gain you another $10 or so, at least to test those recent highs over here. Next up, JP Morgan. I mean, JP Morgan went down with earnings, but I think a lot of that was buy on rumor, and I think we got to sell on the news. We've pulled back, and now look at it coming back. I mean, it seems like it wants to go right back up to the highs. This may end up turning into like a cup off of an uptrend. Maybe we'll get a handle up closer to 200, just below 200, and then I'd be looking for a breakout. But AD line starting to turn back up. JP Morgan was at a 52-week high relative to its banking peers just prior to earnings coming out. And again, that sell on the news and now reversal. I wouldn't be surprised to start seeing that relative strength pick back up again on JP Morgan. Wells Fargo, this one's already broken back out again. Wells Fargo, I think, is one of the best stocks in this space, especially among the large cap bank stocks. But this is one that was going sideways, went up a little bit with earnings, pulled back, and then the last 4 or 5 days, I mean, JP Morgan's been going up, but it hasn't broken out. Wells Fargo's gone up and clearly made a breakout above key resistance around $58. Wells Fargo also just set a new 52-week high relative to banks. So this is certainly a stock to keep on your radar during any pullback. Progressive Corp. Look at Progressive Corp relative to the property and casualty insurance group. Pulling back a little bit after earnings, but now making a move and breaking out. Another very strong stock. Citigroup, another one in the banking area. AD line starting to turn back up. You can see the relative strength near its 52-week high. Volume trends are really good. Nice acceleration here in the last 4 or 5 trading days. Back to the upside. Citigroup looks good. Goldman Sachs made a breakout today. So here was your earnings. We pulled back. And then since that little bit of a pullback, we hung above the 50-day, certainly above price support, and then exploded back to the upside here. Financials have been helping to hold the market together. Goldman Sachs, one of the leaders in its space, you can see right there, breaking to a new 52-week relative high. These are the kinds of stocks that I want to be thinking about trading because they're relative winners. Schwab makes the breakout above these tops. AD line strong, 52-week relative high, or pretty darn close to it. It's like we're back up to where we were in July of last year on a relative basis. Bank of America, and by the way, you're hearing a lot of financial companies, but mostly that's what have reported. I mean, financials are usually the first group to report. So once the banks, those big banks, JP Morgan, Wells Fargo, and so forth, once they kick off earnings season, first couple of weeks, we tend to get a lot of financial reports out. And so that's why you're seeing this list littered with financial companies. A week or two from now, if I do the same exercise, there will be a lot of companies outside of the financial space that will be on a solid watch list like this. Most of these companies, by the way, maybe all of them, you're going to see on the strong earnings chart list. Some of these you already have. Some of these large banks were added last week. Yeah, I mean, we're going to continue to get more and more of these companies. And if they beat top line, they beat bottom line, and they're relative leaders, they're going to be on the strong earnings chart list. IBKR, another financial stock, Interactive Brokers, coming back up, got a double top in place. Maybe we pause here a little bit, but to me, it looks like right now, sideways consolidation. So we've got an uptrend, put in this low here, this high here. We've already retested this low. Now we've retested this high. This is the range we're in, 107.50 up to about 115. We'll see which way breaks. My guess is that we will break to the upside at some point. UAL, I mean, airlines are not my favorite industry group. It seems like just when they get going, you jump in, then they just kind of fall apart. And then when you think they have no chance of rebounding because the technicals look so bad, that's when they start to rebound. So I struggle with trading some of the airlines, but I'm still not going to ignore some of these companies that look really good. UAL, that AD line has been soaring on this push to the upside, and check out the volume. I mean, some of the biggest volume days of the last 10 months have come in just in the last week. So this is something I wouldn't ignore. And if we do see a pullback back into the upper 40s, you're going to quickly see that rising 20-day offer some support underneath. And also the breakout came at 48. And you've got that rising 20-day up close to 47. So anything back into the upper 40s would start to look really good on United Airlines, at least if you want an airline stock. That's where I would be thinking about it, and then just make sure you keep your stop in play. BMI, Badger Meter, another one that's absolutely taken off here. This is actually in the technology area. Big breakout. You can see that's like a Maribozu candle. I talked about this with gaps. I kind of view this as more of like a breakaway gap from this sideways consolidation. But that kind of a candle and this kind of volume, heaviest of the last 10 months, tells me that this is a stock that has potentially more room to the upside. If you want to wait, try and get a pullback, you might see support back around 175. I'm not sure initially we're going to get it back to this 165 area. But anyway, BMI looks really strong. AD line, relative strength, everything. ISRG. Now, this one is pulled back a little bit. This one I kind of hesitated until I saw that it was trading near a 52-week high relative to its peers. Because if you look down, medical equipment relative to the S&P hasn't done very well. But ISRG relative to its peers has done extremely well. AD line remains fairly strong. We are trading below the moving averages. So maybe this is one you wait and you see if it starts to improve, maybe breaking back out above that 388 level, somewhere in there, would take out this big red candle on heavy volume. So kind of negate that candle, and moving back through moving averages obviously would start to make it look more like sideways consolidation off of a nice uptrend. Now, if we can't do those things and we go back to a new low, probably this gap support level right here that comes in at about 347, 348. That would be my downside target. If it can't strengthen here, I would expect maybe we'll see some strength return if we get back down just below that 350 level. American Express. This is one I talked about. They reported on Friday of last week, but I think last Monday, I put out in an EB Digest article that I really thought American Express was one of the best looking financial charts going into earnings. And once they came out and reported, I mean, the stock has just been exploding higher on big volume. AD line is now moved up, 52-week relative high, clearly one of the strongest consumer finance stocks. So AXP, I think, continues to look really good on the chart. Pull back to around 230 would be an interesting first entry if you're looking for entry into a stock like this. And the rising 20-day, I wouldn't ignore that either. That will continue to move higher and provide some support starting right now around 224, but it'll keep moving up pretty rapidly. AGNC, this is actually in the real estate investment trust area, the REIT. So it's a mortgage REIT. It did move back up here. It's held on to this price support, gap support area. So you can kind of see this move up and then this kind of like continuation gap to the upside. But this gap support has been holding and it held again. And we actually climbed just above 1 penny above the 20-day EMA today. And real estate has been weak. So when you look at the relative strength here, you can see clearly AGNC has been one of the leaders in this space. AMP pulled back today. We didn't have a very good day today, and you definitely saw the relative strength start to break back down. I would be interested in making sure that 400 holds. We had like a triple top here. We broke out above 400 and we have not gone back down to test it. Maybe we get a reversal, something that reverses right around that 400 level. If it doesn't, continues to move down, the volume continues to be heavy, I would be a little careful. But the investment services group, you can see, did just move to about a 3-month relative high. And this was a leader up until about maybe 3, 4, 5 weeks ago. So I'm giving it the benefit of the doubt right now, but I really would like to see it turn. No, I don't really want to see it go down much lower than 400. ARE Alexandria, RE Equity. This is another REIT. This is an industrial and office REIT. Again, look at the relative strength. So the group has been absolutely horrible relative to the S&P, but ARE has actually been doing really well relative to its peers. It's holding on to the recent low. Clearly, it's in kind of a consolidation mode after an uptrend, and that's better than most REITs right now. Real estate's been awful. So this is at least a relative performer. So while, I wouldn't pick it over some of the other stocks I've been talking about tonight, if real estate starts to strengthen at some point, this is a stock that could do very well. Look at the last time we saw strength come into this area of the market relative to the S&P. Look what ARE did. Just absolutely exploded to the upside, and it continues to outperform its peers. So if its peers start to gain any strength, this is one that could easily move back up and break out again. AZZ, this is in the electrical components and equipment index. So again, another technology stock. And AZZ, you can see breaking out above a double top. AD line looks great. Relative strength, new 52-week high. If anything, volume can be a little suspect. I thought about not including it because of the volume, but we wouldn't put it out as a possible trade in our daily market report or anything, because we wouldn't want a large group of people getting into it simultaneously because of the light volume. But this is one you may want to watch on your own. So I just wanted to mention it. Crane Company, CR. I really like this. It didn't make the breakout, but it went right back up to resistance. We know our support is right at about 128 or so. Resistance up near like 138, 139. And so we'll see if we can break out. AD line has remained pretty strong, pretty steady. And there is your breakout relative to its industrial machinery peers. MEDP, MedPace Holdings. This one was all over the place. Last night, after hours, it looked like it was going down. I think it was down to about 366 in after hours trading. And then in the morning, before the market opened, I saw it was up to about 385 or something pre-market. It ended up opening at 378. It went all the way down to 350, 355, went all the way back up to 415 to challenge the breakout up there, and then settled down just beneath it. But that was a crazy volatile session today for MedPace. But again, AD line looks good. And with that heavy volume, we closed near the high of the day. That's what sent that AD line back up. And on a relative basis versus biotechs, new 52-week high. TFC, it's in the banking area. We haven't gotten the breakout yet, but I really like these last three candles. Volume's been strong. AD line just broke to a new high, even though we haven't gotten that new high yet in price. So look for that. On a relative basis, it had been downtrending, but it looks to me like it's breaking out to about a 2-month high. So I think this is one that maybe might just be strengthening. Watch to see if we can get that breakout over about 39 and a quarter. Verizon Communications. So we had a big gap up, a failure with a big red candle, but then we bounced back today. AD line remains strong. We were at a 52-week relative high. This is a leading stock in this particular area. And unfortunately, it's the fixed line telecommunications group that has just been downtrending. And it's a little bit more defensive area. So it kind of makes sense that it's going to underperform when the market goes up. But this is one that pays a nice dividend. I think Verizon may pay like 6.5% dividend. I don't think I'm making that up. I think that's what I remember. Anyway, I believe Verizon pays a really good dividend and continues to be a pretty good performer as well. It's not going to, you're not going to see this thing move up 50% in a year. I think that's pretty unlikely. But you might get a 5 or 10% pop with a really nice dividend to boot. And so anyway, I thought I'd mention, I thought Verizon looked pretty good. Now, this last stock I want to show you is one that was heading in the other direction. CALX. So I'm not going to go through and point out all the ones that don't look good to me because I think we're in a secular bull market. I'm not interested in shorting, and I really don't want to spend my time, which I have a limited amount of, trying to look for stocks that don't look good. That just doesn't make any sense to me. I'd rather spend all of my time looking for long candidates and 0 of my time looking for short candidates. Because again, my time's limited, spread pretty thin, and I just want to make sure that my time is well spent. But this is a stock that you can see gap down here, another gap down here. Here was the third gap down. So we've got like this series of continuation gaps. It's a lousy performer. Look at the AD line down near a 52-week low, relative strength, 52-week low. The group itself has been trending lower, computer services. So all of a sudden, you've got the opposite of everything we've talked about. I don't want any part of this. In fact, I believe this morning, I pulled this chart up on the show and said we might see it go back and fill the gap. But if it did that, I wouldn't feel very good about it after that. And so after reaching a high today of $29.89, it actually fell back almost $2 from that intraday high and finished at $28.03. Yeah, we've got a little bit of a hollow candle. Maybe we'll make another push, maybe back to that gap resistance or even to the 20-day perhaps. But I see that as nothing more than an opportunity if you were long to get the heck out. Because I think we're going to see another big push to the upside. This to me is not an exhaustion gap. And when I talked about trading gaps last night, one of the things I said was you have to see how the candle finishes and you have to see the volume. So you can't just assume that off of a downtrend, when you gap down, it's going to be an exhaustive gap. They don't happen very often. And here in this case, first of all, volume picked up some, but it isn't the heaviest volume day on the chart, not even close to it. So there's no way I'm looking at this and thinking that's exhaustion. Also, AD line, losing steam, relative strength down. I mean, I'm just not seeing it. So this is kind of the opposite of all the things that we like to see going into an earnings report. So with that, I want to move on to stocks that will be reporting over the next few days. And I think I even started with some that already just reported this afternoon so that we can take a look at them. First up, Tesla. So as I look at this chart, and I don't know why that one's not coming up. Yeah, I want to have the same setups. Let me make sure that these are all the same. Now, all of them in this chart list should be set up the same way. Anyhow, Tesla, the one good thing about Tesla is the AD line continues to kind of go sideways, even though price action is going down. And you see a lot of gap downs, and you also see a lot of hollow candles. And we got it the last 2 days, we've seen it again. So my opinion on Tesla is that it's going to rebound and it's going to come back, but I don't know where it goes first. I do have this problem with Tesla at about 160 right now. Until it can convince me that it can get through 160 or 162, that falling 20-day EMA is going to be important. Till we can get through that, we got some issues, I think. So Tesla right now, and I'll give you the after hours on these first 5 because they're going to be ones that just reported. So right now, Tesla's up 12 bucks, 156.62. That's 8%. Maybe by tomorrow morning, maybe we open at 165. I mean, I don't know. Maybe we open up 20 bucks. That would at least be a solid start to the day. Whether or not we hold up there would be another story. But yeah, Tesla, like I said, still got some work to do. I'd be a little careful here. Visa. So Visa's going down. AD line remains very strong. This one has not been a great relative performer, but I do like the space. Consumer finance, we just saw AXP come out with a great report and take off to the upside. So this might be a simple case where rising tide lifts all boats, at least all consumer finance boats. Let's see, after hours, Visa is up 8 bucks, 3% to 282. So it's back up over its moving averages. Maybe it pulls back and tests these moving averages tomorrow, but this could turn into be kind of like a cup. And again, if they beat top and bottom line and they get back up through the moving averages and can remain above the moving averages, especially the 20-day, that's going to start looking to me more like a cup is underway. So Visa, if I was going into earnings, I would have said I like AXP way more than Visa. Even they're in the same space, but look at the relative strength. And AXP is going straight up on a relative basis. So for whatever reason, I'm not going to tell you that one is absolutely better than the other. I'm just telling you that when I look at the chart, the story that these charts are telling me is that Wall Street likes American Express a lot better than Visa. And they're the ones doing all the research and going out and meeting with management teams, find out what's going on in their business, how they're stacking up against their competition and so forth. So when I see 2 companies from the same industry group and one is going up to a 52-week high and the other one's down at a 52-week low, there's no question which one I trust the most. So we'll see how this plays out for Visa, and maybe it starts to regain strength. But personally, I would still like American Express in this group. Texas Instruments. Texas Instruments just starting to show a little bit of relative strength. But again, this would not have been one of the stocks that I would have been looking to for a lot of leadership. But at least in after hours, right now, Texas Instruments up $10.43. That's 175.90. So we're getting really close. Remember I said, can we open above candle body resistance? On Texas Instruments, that's 175.99. That's where we open that day. we have not had any opens or closes above 175.99. Right now, after hours, we're at 175.90. If we open tomorrow morning below 175.99, I am going to feel more bearish short term. In other words, I would think maybe we'll pull back. You don't have to trade it, just watch it and see what happens. This doesn't always work, but it's something that I've noticed over the years, that when you get a gap up and you clear opens and closes, that generally is a bullish signal. And when you gap up big and you fall just beneath it, then I think the odds are greater that you're going to have a pullback. So anyway, just throwing it out there, mark it down, and just watch it tomorrow and see what happens. Maybe I'll be wrong, but that's one of the things that I like to look at. All right, next up, Chubb CB. They reported tonight, and they're currently flat. So I'm not really seeing anything big there just yet. On a relative basis, well, first, the AD line's been going down, and it's actually at a multi-month low, or recently was at a multi-month low. Relative strength is weak. This is not one that I would have felt great about going into earnings. This would have been like Visa. To me, there's probably a lot of other property and casualty insurance companies that would be much better, because look at the group. The group has been very strong, but Chubb has been a laggard within the group. Why not go find a leader in the group? So this one, I would just pass on. CNI, Canadian National Rail. This has been pretty strong now over the last 7 weeks or so on a relative basis to railroads, but railroads haven't been strong. It almost looks like a mirror image. So while railroads keep going lower, CNI has actually held up pretty well. I would just be careful if it were to break down below about 127. Certainly a close below 126. Something like that would make me more nervous, because we've been holding around that 127 level. And if you break down and you're in a group that's not been performing well, it's hard for me to make an excuse to stay in it. AD line not looking bad, though. So I would consider this one of the better railroads. But unless the railroads turn around, this one's going to have to continue to show leadership to hold on to its support. All right, now starting with tomorrow morning's reports. These will be coming out in the morning. So I don't know what the reaction is. But let me check that last one. CNA, I'm showing, CNO or CNI. It's so many tickers. All right, CNI is down 341 after hours. It's at 126. So it looks like it might break down at the open tomorrow. Might want to be a little careful with that one. Let's see where it opens. All right, so moving on now, TMO. All of these, like I said, I don't have any idea where they're going to open. I don't know what their reports are, because obviously they're coming out in the morning. So just looking at this, I like the AD line where it is. Clearly, to me, price support resides somewhere in this 530, 540 area as we go back. Volume was really good on this move today, but I don't place a lot of emphasis on how a stock trades right before earnings, because some people think, oh, well, somebody knows something, so they're getting in, I'm going to get in. Well, a lot of times I think it's a trap. I've seen so many times where a stock trades really well right before its earnings and then collapses with its earnings. As I look at this stock relative to medical equipment, I'm about at a 6-month high, so I think I'm okay with the stock, but the group's not great. Medical equipment, and this is just kind of like an average performer in an underperforming group. Does that get anyone excited? Doesn't get me excited either. AT&T. This one kind of like Verizon. You can see AT&T's been outperforming the fixed line telecom group. The group itself isn't that great, but AT&T pays a nice dividend, probably 6%. Again, I'm not sure exactly where they are with their dividend, but it might be somewhere in that neighborhood. To the downside, I think 16 and a quarter is where we really want to try to hold. Maybe you can go down to 15.85 or something like that. but 1585 to about 1625. That range has been holding support on AT&T now since middle part of December, all the way back to here. So that's an area I definitely would want to hold on any selling here in the near term. Boeing, I love Boeing long term, but this thing just is so ugly in the short term. Long-term investors, I think you'll be fine with it. Short term, still, I mean, we were coming out, looked really good at the end of the year. I thought the worst was behind it. We are seeing a lot of gaps down to the downside, a lot of gap downs. So I'd have to go back and take a look to see from a manipulation standpoint, whether I feel it's being manipulated. I can tell you that over the last over this period right here, we had 5, 7, 10. We had 11 consecutive days finishing with red-filled candles. That doesn't give me a great sign of that, that there's a lot of manipulation taking place right now. And then sideways action here, not really even a bounce. So I suspect we're going to have to suffer through some additional short-term weakness in Boeing before maybe putting in a more significant long-term bottom somewhere down the road. But I can't like the stock going into earnings. I mean, it's the worst, one of the worst stocks in the aerospace group. Aerospace has actually been pretty strong, but this one just has been horrible. AD line, 52-week low. It's just hard to find anything redeeming about a stock like this heading into its earnings report. Boston Scientific, AD line looks good. Look at the relative strength versus medical equipment. Now, this medical equipment stock I like, and I wouldn't be surprised to see a good report and potentially a gap up and breakout. Now, if it reports great numbers and it pulls back initially tomorrow morning, I think a couple of key areas to watch for support are right just below 66 right here, and maybe even just around that $67 level. But I could see maybe a pullback if it's a sell on the news kind of a thing, but that likely would set up an opportunity for the stock. General Dynamics, AD line great, price action great, relative strength great, and the defense stocks now finally starting to show a little bit of relative strength. So GD, if it comes out with some good numbers in the morning, don't be surprised to see a breakout here. All right, so those are companies reporting this evening and tomorrow morning. So now the next 10 I give you are going to be tomorrow evening, Wednesday evening, and Thursday morning. And we'll start off with Meta. So Meta, I think, is just pulling back here in April. I think I'll be shocked if they don't show another great report. Internet stocks have been going up. Yes, Meta's definitely pulled back some, but I think it could just be consolidation off of all of this, movement to the upside. I'll be really surprised if Meta misses its earnings. I'll be really surprised. I don't think it's happening. AD line, though, has pulled back, as has relative strength. So maybe we get decent news and we just continue to meander sideways for a while. I think the biggest level on the Meta chart right now is all the way back here. We haven't had an open or a close below about 455 since early February. Now, if you break below 480, I think that opens up the possibility to 455. So those would be the two key levels to watch. Initially 480, then 455. But I wouldn't be surprised to see a good report and move back up toward that 430 number. Or excuse me, 530. IBM 80 line, okay. I mean, we've been going down here for a little while, but we're testing key support just below 180. It's been consolidating, but it remains one of the best computer services companies out there. Don't be surprised if they report to the upside and we get a gap up. I would not be surprised to see a pretty good reaction tomorrow on IBM. ServiceNow, this one went down below where I thought it would go to, which was down at about this 740 level. And it was in a symmetrical triangle that I had talked about. That broke on that big red candle right there. I ended up, I believe, getting stopped out right in there because I owned now. I don't remember if it was because 760 was the symmetrical triangle line. I don't remember if it was 760 or 7. I kind of remember it being 760, but I ended up getting stopped out just below 760. But anyway, this one's starting to bounce back. It did go all the way back down essentially to where we broke out in January above the December high. Kind of went back, tested that area, and turning back to the upside. Big question, can we get through the 20-day? AD line, even through all this selling, has still remained pretty good. And on a relative basis, I mean, software has been pulling back. As we've been putting in new lows on ServiceNow, we actually put in higher lows relative to software. So what I would suggest based on looking at this chart is that a lot of this selling is more to do with the fact that software has been underperforming than it is to do with ServiceNow losing relative strength to its peers. So in other words, I still think it looks like one of the better software companies. I mean, obviously some have held up better than this, but I'm still seeing signs that this is a better than normal or better than average software stock. As far as earnings go, we'll see what happens, but this could have been an opportunity to accumulate, and maybe we get a good report and we're right back up near the highs. We'll see. By the way, you know, if you think this doesn't happen, take a look at Spotify today. I don't like that candle though. We were in breakout mode. And again, look at what this opened below that resistance, went through intraday and failed. So that's kind of what I was talking about earlier. You didn't get the open above the prior resistance. And so the move up intraday, in my opinion, is always suspect when you open below resistance and then try to move through it intraday. In this case, shooting star candle and a failure, unless we get a close above about 311, 312, this is one that I think maybe continues to sideways consolidate. But that was a huge, huge volume day in reversal. And look at that AD line suffered as a result of it. But that's not one of the, that was one that just reported. So let's keep moving. I'll try to pick up the pace here a little bit. Lam Research, this is going to be another one tomorrow evening. So we're getting nice lift off from Texas Instruments in the semi space tonight, but Lam Research will be one tomorrow night. And we've got some other, we've got KLA Corp reporting this week. We've got Intel reporting this week. So there's going to be some other semiconductors that we're going to hear from that could have a hand in how semiconductors finish this week. Anyhow, Lam Research broken down below these prior lows. I think it's got room maybe back up to that 20-day, and then we'll see. But that's a lot of volume and a big deterioration in the AD line. So I'm not sure that we're going to see a great result from Lam Research. So if you're in semiconductors and you get a big pop tomorrow because of Texas Instruments, you might want to be careful because of this one that's going to be reporting tomorrow night. It certainly doesn't look to me as solid as many of the semiconductors. Also tomorrow night, Chipotle. Chipotle has been a great performer. AD lines come back down a little bit, but it continues to show excellent relative strength to restaurants. And it's just had so much momentum going with its earnings in recent quarters. I will be surprised if it doesn't post good numbers. Now, maybe that's not good enough to get the stock to go higher, but I would expect solid numbers to come out. All right. And then, so that would be tomorrow. So that would be Wednesday or Thursday morning. You can see Merck, big gap up here. I'm not sure, that might've been raised guidance or something back at the end of March. Anyway, we came all the way back down, filled the gap, and now we're trying to turn around and go back up. This could be the right side of a cup. Printing, AD line remains strong. Merck remains one of the best pharmaceuticals. So my guess is that this one, if they have good numbers, and I expect they will, I wouldn't be surprised to see Merck maybe making a way back up toward its high. AZN, AstraZeneca, just recently breaking out. AD line still okay. Relative strength picking up. but still down quite a bit from, where it was earlier in the year. I like Merck better than AZN going into its earnings report, even though AZN has already broken out. I just like the body of work on the chart that I see with Merck. Caterpillar, nice AD line, super move here and pullback. This one, I think, sets up a lot like American Express and GE. GE was one that I said back in Monday's EB Digest. I thought it could be one of the best industrial reports coming out. And they did. I mean, that company, CGE, went back up, made this breakout, huge volume, AD line great, relative strength great. And so both AXP and GE kind of backed me up, looking at the relative strength, following the AD lines, volume trends, all of this. This just shows me that Wall Street has been building positions in GE and in AXP, and now we know why. We're getting the results. All right, so anyway, Caterpillar, I think Caterpillar, while maybe not as strong as a couple of, the others I just talked about, I think this pullback represents an opportunity. There are some times when I'm willing to take a chance and hold into earnings. And for me, I think Caterpillar on this, I like the way this chart sets up. It's beautiful all the way into the end of the quarter. Then we see a little bit of profit taking here, during the quiet period. And now the numbers come out tomorrow. I wouldn't be surprised to see good numbers. Union Pacific, needs to really hold right in this area. We had a top on UNP, which was at about low 230s back here. Here we broke out from about 232 or 231. And then we got down here just below 230 and moving back up. Can we get back through the 20? I don't know. AD line weakening. We've been seeing a little bit of weakness in Union Pacific on a relative basis in 2024. We're testing the 20-day from underneath. This one kind of looks more iffy to me. SPGI, S&P Global Inc. AD line holding up pretty well. We did have this breakdown, but it was on kind of average volume. Wasn't a big volume move to the downside. We've rebounded, but again, we had big volume with a red filled candle today. Relative strength down near a 52-week low. Anytime I see that, I'm not really going to be a big fan. So this one, I think, again, I think you're going to see that there are much better stocks in the specialty finance area. AD line looks pretty good, but that relative strength line looks bad. We're trading below the 20. The 20 has been below the 50 now for a couple of months. So this one hasn't really participated. We've seen a lot of stocks, that are a little bit more value oriented, that haven't, that have been doing really well, and this one hasn't. So I've got some doubts going into this report as well. All right, the last 10 stocks I have for you, this will be Thursday night stocks and Friday morning stocks that report results. And these are, again, some of the largest companies. Microsoft put in a nice hammer at a key area of support between 395 and 400. I would really like to see that hold. The relative strength just broke to a 52-week high. I think we're going to see some good numbers out of Microsoft. Google, AD line near the high. Beautiful recent move to the upside. Relative strength resuming, and it's in that hot internet space. I would expect a good report out of Google. Amazon, AD line still okay near the high. After a huge move up, we have pulled back recently, but this is another one recently at a 52-week high. I think you're going to see a good report out of Amazon. So if we do pull back over the next couple of days, we could see a big lift on Thursday evening from Microsoft, Google, and Amazon, all of which to me suggest that they could have good reports. We'll see. I could be wrong, but the story that I'm reading in these charts is that we could see some good numbers come out. Intel's falling apart. Intel could be more like a Tesla, where maybe it doesn't matter what it says. Maybe it's going to get a little bit of a bounce. But that relative strength line is awful. The current AD line, horrible. Price action, horrible. The 20-day is just accelerating away from the 50-day. I mean, this looks like one of the weakest stocks going into its earnings report. So something's going on. Like I said, maybe we get a bounce on the news, but I don't think the news is going to be very good. Probably like, John said with Tesla, missing top line, missing bottom line. We could maybe see that kind of result with Intel, but we get a gap up anyway, just because we've been so weak heading into the report. KLA, this is a semi-equipment manufacturer, been up near its 52-week high on the AD line. That's a good sign. But again, relative strength, not great. We may need some other semiconductor stocks. Like I said, we're getting a little bit of a pop this evening because of Texas Instruments. But these other semiconductor companies, some of these large ones that are going to be reporting this week, they got their work cut out for them. I'm not saying they can't go higher, but I just don't like the way they're setting up heading into earnings. ExxonMobil, this will be Friday morning. I see a beautiful move up. AD line looks good. Relative strength looks good. Watch maybe for an exhaustion kind of a gap. After this kind of a move, I think they'll report good numbers. If we happen to gap up, let's see how that candle prints. If we gap way up and have a big black candle or come back down and fail to hold this breakout, and you notice the volume is 50, 60, 70 million shares, that could put in a top on ExxonMobil. But right now, everything still looks fine. I'm not trying to put too much of a scare into everyone, but I'm not a big fan of energy over the next few months. I've been kind of vocal about that. Energy, materials, things like gold, those areas, they've had a big run. If I'm right about the market going back up, I think many of these areas could go back down, especially gold. I mean, with the volatility index dropping, you see what happens to gold. Gold's had a couple of rough days. I just would be careful with gold. Anyway, ExxonMobil, like I said, I think we'll have a good report, but the reaction is going to be really important here. Chevron, kind of the same thing. Now, we didn't take out the highs from back in the third and fourth quarter of 2023. So maybe we'll go up with earnings and challenge that. But like ExxonMobil, I want to see what happens afterwards because CVX has not been a very good relative performer. The AD line is okay. It's been going sideways, though, while price action's been going up. And that's maybe just a little bit of a concern as well. ABBV, this is in the biotech area. This has been a stock that showed pretty nice relative strength right up until the end of its recent quarter. It's seen some selling, but I would be watching 160 to about 162.5. I think if we hold on to this area, I actually think we could continue to go back higher on ABBV. Relative strength still looks pretty good. AD line, even though we were going straight down in price, notice we haven't broken below this low on the AD line from back in the middle part of March. So this could be a case where we're seeing some accumulation. And ABBV, it's a little bit of a reach to hold it into earnings, but I wouldn't be surprised if it has decent results and a decent reaction. Two more to go. HCA, this is HCA Healthcare. Rebounding, AD line's been okay. Not really bad there. And recent relative 52-week high versus healthcare providers index. So we pulled back, went all the way back down to kind of in this gap support zone. But now we're coming right back up. I think we're in a trading range now between 295 and about 335. And we're sitting in the middle of it. So let's see which way we break. My gut feeling is that this is going to break out to the upside before it does the downside. Last stock, Colgate-Palmolive. I love this AD line right here. Love the increasing relative strength. Volume trend's pretty good. This looks like a cup to me. I think with earnings, maybe we get up to this 90 area, 89 and a half, 90 area. And if we do solid results and we see a handle, that would be an opportunity to jump in. Or it might be a situation where we do have good numbers and maybe we sell off because if some of the staples stocks don't do well in the short term, maybe we do have a little bit of a pullback. But the rising 20 and 50-day moving averages to me look like nice entry into a more defensive oriented stock. And that is it. So we went through a lot of charts tonight. In the past, what I did was I gave you recent stocks that looked pretty good to me, kind of the same as I did tonight. But I went forward and I told you only the stocks that I thought looked good. So I'd give you maybe 30 stocks that look good. This was, a little bit, well, probably about the same number of stocks, maybe 30 or so. But these were the highest market cap stocks. Because last time when I did the stocks that just looked good to me, that showed a lot of relative strength and I think could have a good report, I got a lot of questions at the end saying, well, what do you think about Meta or what do you think about Microsoft? Because I didn't have those stocks necessarily. I probably did with Meta, but I don't think I did with Microsoft. Some of the other bigger names I didn't mention, and it seemed like a lot of folks wanted me to talk about those stocks. So that's why I changed it up. But you can let me know what you think, whether you like this format better, whether you would rather me just say, here are the 20 stocks that I really like going into earnings, because I can do that next week when I look at the Q1 earnings for the next couple of weeks going out. Today, I only looked at the next 3 days because we're going to have another event on Monday. So I'm not going to go out beyond that event. I'll save that for next week. Anyhow, John, went just a little bit over an hour, but I got time if there are any questions.
Pretty quiet crowd because they're taking notes like I was.
Okay.
That was some tremendous information. Ed did make a note that on stock charts, he had that 404 error the other day.
Yeah.
And it cleared his cache and it fixed it.
Yeah. I think I've
So,
done that before. I think I've done the same thing. That makes sense.
I'm telling you, that's it.
Awesome.
Yeah.
Either I put everyone to sleep or they were just mesmerized by all the charts we went over. I don't know which, but anyway, I do want to mention one more time that I'm going to be on vacation starting tomorrow around noon. So it's going to be a very skeletal week in terms of reports. John, I know you had agreed you were going to do a quick market update each day for everybody, Wednesday through Friday. So at least, you're getting something. And if I see anything, I'll be looking at stocks, of course, my phone. And even while I'm on the golf course, I'll be checking things out. So if I see anything, I'll certainly pass it along to you and let you know. But yeah, I mean, I think right now, the biggest question with the overall market is, is this a bounce in what could be an ABC correction, or is this a V bottom? And we just went down for a couple of weeks. Now we're going to go right back up for a couple of weeks. It's, market's got to tell us this. It's hard to predict which way the market's going to go in the short term. But I do think, for those who have been saying, well, I want to get in when the market pulls back. Well, the tendency is when the market pulls back, you get scared to pull the trigger. I would just simply say, if you were waiting for a pullback, you're getting it. And I would use it personally to take advantage of what I think will be a stronger market later in the year. So anyway, with that, again, appreciate everybody tuning in. We will have that recording out to you later tonight or tomorrow morning. So you can be on the lookout for that and always go back and check out some of the things that I talked about. But yeah, have a great rest of your week and weekend. I'll be back bright-eyed and bushy-tailed next Monday, hopefully, ready to jump back in, and maybe we'll have an even better market than what we've seen the last couple of days. I don't know. Anyhow, have a great evening, everybody. I will be back tomorrow morning, though, for one final Trading Places live show this week, and tomorrow's live trading room at 10 a.m. is still on, but it will be abbreviated, and most likely much of what I'll talk about is just answering individual questions for everybody. Anyway, have a great evening. Happy trading.